everyone. Good morning. And afternoon, I guess, if you're on the East Coast. So I would say that they did a pretty decent job of at least holding 6-6. Usually around the 6-4, 6-5, 6-6 area is where we start getting into the means. So that can increase volatility, okay? They also stalled right near the bear neutral zone, so around 7-7-9-8-9-9. I don't know if you guys can see that here. So bears still have some control here. I think that at the very least, bulls would try to give a retest of 7-7-8-8, which is why I tried a long off 6-6, because I feel like at the very least, they want to try at least retagging the zone before they fully give this back up to the means and take it back down to here. Does that make sense? Because if we fail 7-7-6-6, we have very high odds of getting back to 7-7-5-1, 7-7-5-5 area. Does that sound good? And specifically if we can't get back over 7-7-8-8. Okay? There was a law of confluence around this area too anyway, if you guys remember. So I tried my best to verbally state everything in the report, but today I'm going to take everything that I wrote, okay, and put it into a visual instead. Because I don't know if you guys remember this. Like these areas here, the 8-8, they're the 1371, they're the 1372, they're the 1398, they're the 1384. Do you get what I'm saying? These are huge, huge, huge areas of overhead, okay? So where they're stalling here is huge. And ideally what we want to do is we want to get back to this neutral range, okay? And again, that's the 346 by 4 or 366 by 3. So this is where there's going to be the most overhead, okay? Would be in these areas here. So them struggling a little bit here, even if this is unadjusted, you can kind of see. Okay, there's a lot of support close to down here. Do you see that? Around the 7-2, 7-8, 8-4. If we look at it from an open to close ratio, I'm just going to show you guys real quick. Open to close ratio, same thing. They're struggling a bit to get above that 8-8, 9-4, 9-8. 9-8 is close to where I think that's the 466 by 3, if I'm not mistaken. Like close to here. So there is a lot of overhead around here. Okay? Hopefully you guys can see that. Kind of like close to here. So lots of confluence in this area. I didn't take a big position. I only took 3 contracts just in case they do stall, since they could struggle a little bit there, but the resistance kind of starts closer to like the 8-1, 8-5, 8-8. The most overhead is closer to here though, around 9-7, 9-6, 9-9, 0-5, and 13 to 12, this range in here. We did start the week flat too, like I figured we would. That's kind of how I figured they would start the week, especially if they don't want to progress too much, but they also don't want to fail. And mainly because we're stuck in an inside range on both the 2-day and the 6-day. So we could just be flagging and sideways for a little bit, especially after hitting like such big ranges like this. I did have some odds coming up closer to 130, so again, they could also just be stalling and delaying here until then. So this is why I decided to start the stream now. These were the higher odds of getting into the channel during, or sorry, into the zone around this time. Oil was doing really good today too. And I really liked Oracle. I did take another long on Oracle when it started basing right here. I mentioned that a few minutes ago in the Discord. I feel like this one still has some room to push over 152. It was one of the stronger lower volatility semis this morning. So Monday, we don't have too much going on today either. I think we have a Fed speaker at 3. I didn't see anything else. I'm not sure if you guys did. Did you guys see anything else scheduled for today? I didn't see anything. Unless it's going to be some sort of news. How are you guys doing anyway? There's not very many people in here. I haven't streamed in a while, so I feel like I have to get these numbers back up. Let me just post something in here. Anyway, I hope this helps you guys a little bit. We did start the session off at a fairly flat open once again, like that 7773. Like I said on the report, around 7772, 7775, 7778, 7781. These are all considered technically a flat open. Do you guys see why? Because even though they're core opens, they're not as calculated as maybe opening closer to like here or here. Okay, so it's still keeping core odds alive, okay, because it's a good spot to open, but it's not opening like at overhead, okay, which sometimes is actually better, because sometimes when you open at overhead and then stall immediately, that's what triggers a bigger move down, especially if the overhead is a bear neutral zone or a neutral zone anyway, right? Because these areas tend to imply some volatility anyhow. And they did a pretty good job of holding like the 6971 this morning too, but it was just kind of that stall. Overnight last night, I would say was pretty constructive, especially after they held 7720s on Friday. Like they tried pushing, but there's one thing that stood out from overnight yesterday. Let me go back and show you guys. The one thing that stood out the most from overnight yesterday was the fact that they didn't enter the zone. Okay, so I don't know if you guys could see that. And it kind of took them until midnight until they kind of came stalled 779293 and then kind of pushed. So they're not even hitting neutral range, which honestly makes sense. Why? Why do you guys think they're stalling neutral or bear neutral? So they're entering the zone, which is still progressive, but they're not progressing high enough to at least get back above 7805. Why do you guys think that is? So they're holding 6.6. They're breaking 8.8. They're not getting over 78.05. They're not breaking back beneath 77.64 or 55. They're keeping it pretty tight. Why do you guys think that is? And this is what will help you guys trade better or know where you can capture range even on slower sideways kind of days like this. And we haven't broken a 17-point interval yet. Usually you have to break at least 17 points to get some sort of progression. Yes, but why else? We're stuck in what? We just talked about this. It was the first thing that I mentioned. This is the best area to digest because market knows it'll progress downside beneath here and it'll progress upside above here. They're not quite ready to progress yet. They don't need to. Did we have very high odds for August 10th? No, because we're stuck in an inside range, right? So there's only so much range we can work with. And right now, the upside is basically kind of limited to this area here. Let's just say anywhere between 12 to 13 points, okay? And on downside, it's the same thing. We're limited to around 12 or 13 points. Does that make sense, you guys? Closer to that 5-1 area, which is that calculated spot that we talked about on the report and on Thursday, Friday. Okay, this area here. This was the conditions from last week. 77.51 is extremely calculated. Okay, so is 78.12. Does that make sense? I need it to make sense. Because if it doesn't make sense, that's an issue. On both ends of the trade, this is basically a little bit stuck. So 7751 when we're unadjusted is huge. Okay. This area here, and specific to this range in here, okay, is that 1398. Do you guys remember that? Okay, this area here, the off lows, off 6353. This is the 1398 points. Okay, everyone's on the same page. I need you guys to know why these areas are calculated, because if you don't, then that's a problem. 1398 by 3 is the 466. Okay, that's 75% of the range. Okay, so we can all agree that 7751 is calculated, correct? And when we look back at this off like our 64.15, 64.21, okay, in these ranges in here, 78.05 is extremely calculated. Okay, off the adjusted lows or unadjusted lows. Do you see what I'm saying, you guys? Please say yes. Yes, Izzy, we fully get what you're saying. Okay, this is also the 1398 when it's unadjusted. Okay? So what they're doing right now is they're basically keeping this stuck in between. Do you guys understand the concept here? It should be net equal points on both sides. Okay, so there should be an equal amount of points based on support and overhead on each side. That's how we know that this is calculated. Does that make sense? You guys? I want you guys to look at this and have like a full idea on like how to grasp moves like this, okay? So that you can start picking it up on your own. Okay, so far right now, bears have a slight advantage, which is why it's so crucial that they try breaking this, okay? Because there is a lot of overhead around that 68, 12, 68. That's why I would have preferred that they broke at least 6,800, or sorry, 7,800, because it would have been a little bit closer to getting to this range in here. But do you see the risk reward on both sides? That's what I'm trying to get at, because this is what's going to help you. Okay, so adjusted versus unadjusted, these are the 1398 point ranges. Okay, this is what's going to progress us to essentially basically break or make the next move, right? So if we fail 7751, then we have odds of getting back to 7733, 7722. Okay, if we break 7812, we have odds of retesting 7820, 7828, 30. Do you get what I mean? The risk reward is equal on both sides. Okay, and that's where those numbers are coming in from. So this is what's keeping it range bound. Okay, overall range from highs to lows right now is roughly 33, 34 points. That's impressive. Isn't that insane? Usually you have to break around 33, 34 points to progress anyway, don't you? Currently off lows, so we'd have to break 17 points here. How crazy is that? That's why 8-1's overhead. Okay? Does this make sense from a calculated risk reward perspective and a point theory perspective? Okay, so now you're looking at it from both angles. You're looking at it from an annual range angle, and you're looking from like a macro perspective, like you're zooming all the way out, and you're looking at it from a very micro perspective using just the range theory, okay, of 34 to 17 point theory. Okay, when you open at core ranges, which we did today, do you normally use 34, 17 points per range? And you can measure specifically off the open. So where we open today, that's a core range, right? 25 points. Do you guys agree? Off open. So not off lows, but off opening range. Is that a core range, you guys, or a core ratio? Yes, right? What are core ratios? How many points do you normally get? Usually between 25 to 29, 52 to 58, 72 to 78, 103 to 115, correct? So from an opening perspective, they are technically going core ratios, okay? From a low perspective, which they did trigger the mean slightly, that would make more sense that it'd be like around, like the means and neutral areas are usually those 34 to 44 point ranges. So this makes sense off a low to high ratio, okay? 44 points is going to be very close to that 7808, 7812. If they hit a 51 to 52 to 55 point range off these lows, you'd get back to highs. Does that make sense? And based on where they open, technically like those core ratios would be max range theory for that, but I don't think that we have very high odds today because one, we haven't even reclaimed the zone yet. Two, we don't have high odds for August 10th, okay? So this is where they could start limiting range a little bit, maybe to 33 points or something off open if they did progress this a little bit, okay? And that would net us our 7805. Isn't that interesting? So 33 to 34 points off open is around that 7805, 7806 area. That's where your confluence comes into play. 44-ish points is right around 78, 14, 15. Off lows, you're closer to 7809, 7810. And that's if they break upside, okay? There's a lot of overhead around this 8150 area. I think that was the 17 point range off lows. Right around here. And so far this window they stalled. So I hope that at least helps you guys get a better understanding of risk reward, because it is very important when you're trading. If you don't understand risk reward, that's why people tend to lose money, because they don't really have an idea of what their risk reward even is, what their odds even are, okay? Because you can understand your risk reward, but you also have to understand probability, right? How high are the odds of that happening? Is there a chance that they could just keep it stuck today in between both if they wanted to? What do you guys think? Could they just keep it stuck in between? You can already see the reduction in range after the 130, 136 period. What do you guys think? Yeah, even just to progress slightly, they could wait till the 11th, right? Especially if they need to break this up into multi-time lots. Does that make sense? Because, okay, while we have odds for the 11th, we're still potentially stuck until the 16th, 17th on the wider time frames. Do you know what I mean? This can also just digest on the 4-day. Okay, they could just keep this sideways. Like, there is a window between the 11th and 17th. So 11th and 17th is kind of the window here that we're looking for, okay? Do you see that? There's also a window on the 13th. So, and it would make sense that they did that if, let's say right now, currently max overhead is 7820s, right? support is 77.20. So basically core to core. We open the week at core. So if they try keeping things in between, they'll try avoiding the bigger areas of risk. So like the channel, the means, do you get what I mean, you guys? Like the neutral zone, like they'll keep this very, very, very sticky, I guess, like in tight range. And they'll break it up into increments, right? Over a period of several days. So to me, this makes sense that they would keep it within this range today. Obviously, I could be wrong. I'm not always right, but that's how I perceive this, okay? Whereas tomorrow could be a slightly better odd of them, like, getting a little bit more range. And it could just be to preserve those inside ranges. So, I know it's kind of a boring day to be back and streaming, but I don't know. I feel like even just having some sort of like beneficial knowledge on like range theory is important too. I did take some XOM long this morning and that one's holding up okay. I was looking to see if this could get back over 160. I didn't really think it would get back over 160 today, but if ES doesn't progress here, there's a chance that they could do that. Zeta. That's a nice daily chart. And a nice 2-day. It's flagging on a 6-month. That looks like probably an annual flag. Can't really see it. This between like an 11.5 month cycle is flagging. You just can't see. You could use this as like the pull range though. From here to here. Yeah, it's a nice looking setup. That's an annual setup, so that could be durational till next year. What does this company do? Yeah, it looks like Q1 of 2027 is what that is pointing to, because if it's on an 11.5 month to 12-month frame, like you saw it, that would be into next year for January. But even this here, do you see this? Like the 6-month looks pretty good too. This would be January, so that it would have to line up into Q1. Of next year. Thanks for putting that on our radar. Do they have options for leaps? Oh, they do have options. They do January 15th and March 19th. There's some interest on the $30 strike for next year. You could even do December 18th actually on that too, because there's some interest for, if it was like the 11.5 month frame, they'd be a little bit less expensive, but. Yeah, they do. They have leaps into next year. So that would kind of be like a 6 to 9 month frame or something like that if you bought into January or March contracts. And you could probably target, I mean, usually if normally you'll get like equal range. So whatever like this pull range is, let's say on like the 6 month, typically once you break that, so probably close to like here, give or take, like close to 30. Once that thing clears this mark in here, you typically can get an Excel break, so probably like $40 price target or something like that, like to here. There was some interest on the $40 strike too, like maybe 3,000 open interest or something for January. You could do like 30 short term, but 40 longer dated or something for March or January. ES stalling right beneath that 8-1 overhead. 8-1 is pretty strong overhead and right into that 12, that 130 to 136 mark. There were some odds again just before 2, but like I said, if they're going to keep this very tight, like I think they are, they'll likely just end up making this more of like those premium decaying type of days, which is what I anticipated for today anyway. I just wanted to jump on stream just to at least help you guys see this ahead of time so you're not like over trading. The best areas for sure were off of the 6.5, 6.6, 6.8, at least for the retest of 8.1. Bears still have a slight advantage over bulls today though too. And you can kind of see that with the slight breach beneath 6.6. Okay. And the failure beneath 8.1. So they have an advantage of like a 1.5. Do you see that? Because they breached below 6.6 by a 1.5, and they're stalling 8.1 by about a 1.5. The next window that opened up was around 150 to 154, but yeah, oil is still holding up. Exxon's very close to breaking that 160, so that's good. Crude also just took out core areas, so this is another reason ES could stall here a little bit. CL is taking out 81.20 and 81.58. Those are huge spots. That's actually a perfect hold too off 79.20 this morning. Do you guys see that? Ahead of the open. Sometimes on days like this, you just have to... One, you could either sit it out. Two, you could diversify if you wanted with oil. Or maybe copper was doing okay this morning too, but sometimes even just sitting out is not a bad idea and waiting for some better probability days like maybe tomorrow or the 13th. Or even taking the week off and waiting until the 17th for next week. I'm a little bit behind on macro events. I need to double check. The 17th. What do we have happening on the 17th? I know we have CPI on Wednesday. I know we've got... I know Canada has CPI on the 17th. I don't think we had anything major on the 17th. Because there's a chance that if they keep this stuck for the 2-week period, which would really, really suck if they keep it sideways, to digest these areas between 76.40s and 78.20. The higher probability windows were in September, but... And the only reason that could make sense is we have rate decision. Canada has rate decision on the 2nd of September. And I'm pretty sure, I thought... Let me double check. That was Canada. I thought the States had it the following week. Because remember we had all those odds on September 14th, 21st, and 22nd? I would imagine that there's probably a lot of confluence with catalyst during the period of September 14th and 21st. Yeah, the States has their next rate decision on the 16th of September. So honestly, that would make sense if they wanted to kind of recycle range over the next few weeks, which I know doesn't really seem like the most interesting way to approach this, but we'll have to kind of, we'll have to see where they end up triggering tomorrow on the 11th and on the 17th. Because that could be our early signs of, even if you look at the, like the 11 day, for instance, you see how a lot of these flipped over on the 30th? Hold on. The 12 day, okay? This doesn't flip till the 17th, and it could stay stuck till the 2nd. Do you see what I'm saying? So some of these could, like, the period between the 17th and, like, early to mid-September is part of the issue here, okay? This one too. This is the 21st until mid-September. I just want to see which ones line up with Fed Day. I was pretty sure a lot of these were around here. So the 18 day, when does this flip? This flips on Monday the 21st, which we have a lot of confluence on. And usually in the past, September 20th, 21st, 22nd are usually extremely volatile days. So, and post OPEX days too. So September 21st, that would be like 2 days after Fed. I'm just checking the calendar for September. So for this month, it's August 19th, 20th, 21st. For next month, it has to be the 16th, 17th, 18th. Yeah, it is. Okay, so they've aligned FOMC for September with OPEX week, okay? In the past, usually post-September OPEX tends to be very volatile, okay? And that happens to be September 21st, okay? We have multiple flips that day. Flips on the 21st this year. Okay? I think that's worth noting in advance, just so that we're a little bit prepared ahead of time. Just from glancing at this, I can already tell what kind of afternoon this is going to be. I'll stick around till maybe around 2:30, but it does seem like they want to keep this pinnable, sadly. I'm sorry for saying the P word. This was the window where it starts to reopen a little bit here, but $10.47 this morning would be linked to, you could use the 19 or 53 minute for highs. I haven't streamed in a while, but usually I like to, it depends. I usually stream when there's odds. So it's not really scheduled streams, so it's not always based on I just want to see what kind of like around here. There is a window here. These are also linked to highs. There is a secondary window around 216, 219, you guys. And if you pay attention here, do you see these sticks right here that kind of came in? We had some flips around 1232, 1233 that were linked to high of day. These were mass reduction sticks. I feel like this is partially why these sticks here in particular, you see how they're almost 17 points, which is what we're lagging. And this is probably the same thing. Their net equals 16.75, 16.75. That's what prevented us from getting back to highs, okay? So these points in time are correlated directly to high of day, okay? So is the range, okay? Back in here, I don't know if you guys can see this. You see around 11:39 how they were trying to get back over 8.1. This is pretty crazy, okay? 8.1 is our calculated spot. That's the current 17-point range off lows. And look at where they're trying to retrace back here. Do you see that? And this is exactly where they're stalling here right now too. So there was a bit of a period coming up right here, but likely more closer to here. Jot this down, you guys, 219 and 216. You can also jot down 312. There were some odds after the bell, but like just after the close today. I would imagine that would be the case if, like, let's say they wanted to kind of push range like just after the close. There are some odds right into the close too, around 351, 410. Specifically if they don't have any progression during this 216, 219, 235 period, okay? There are some more odds again that open up around 312, 313. But that overhead's going to stay the same. It's that 8.1 overhead. So we'll see if they can at least try pushing some range here. There were some odds between 154, 157, and 2 o'clock. Okay? I would imagine that we'd probably need at least over 7.6 to 7.8. Okay, so write them down because I might not stream the last hour, you guys. These are the important points in the day. We could probably also track the 1230, 1231 just because they were linked to that 1233 flip. So 1230, 1231 would be linked to, I would think like 101, 139, 101. These would be linked to those volatile periods. So we want to see if there's confluence. There is. That 212 again, okay? That's also linked to that mass volatility stick. So we know that that's for sure a very important period. You could also track the 139. And you can see that this is a negation. This is a negation pattern. You see how they're trying to cancel out this massive bear flag from continuing? That flips at 251, okay? So that's basically the period that the market's opening here in order to try negating some of the volatility that we had around 1230, 1231, 1232. Another period that you could use short term is like the 11-minute or the 8-minute that were also linked to that. I mean, this is kind of if you just want to track short term, but it's not necessarily required. But this is, I'm going to mark this in red because that was linked to those volatile sticks. That 255 was also linked to those volatile periods. And then there were the very, very late odds. What did we say? 101 at 353. Okay. So mark down 353. 353, 351. 351 is linked to high of day. 353, you guys, is linked to that volatile period here, okay? This right here at 2 is linked to highs. So basically the way that you can measure your odds is if the periods that are linked to highs are progressive and the periods that are linked to lows basically negate, okay, so that you avoid volatility during ideally around 211, 212, so we can get those structure breaks of 7-8, maybe a retest of 8-1 by that 216, 219 period, okay? So far 157 and 2 are trying a little bit here. The higher odds were closer to this period here, so we'll see what happens. I'll send you guys a copy of this so that you guys can just, in case you forgot to jot them down. Okay, here you go. Those are the crucial points in the day. And trust me that 7781 is overhead. 7764 is the mean support, which if we fail there, it goes back to 7751 to 7755. If we can clear 8-1, we have odds of retesting 8-8. Okay, I'm going to stick around for this period and I'll probably sign off. Maybe I'll come back the last 10-15 minutes since we have a window here around 351 and 410. Is that okay? It's pretty insane that they're keeping this between a 17 and 34 point ratio, to be honest. Let me share this here. Okay. XOM's getting super close to breaking that 160 mark. So it's definitely putting some pressure on the index here with oil still being pretty strong, to be honest. I have a sell order in, Josh, on XOM once it gets close to breaking this 160 area. And I guess if ES has odds of clearing at this time, let's just be a little bit cautious, okay, to see which trade breaks, basically. Because if XOM clears 160, that's pretty strong. And the period for ES is around this 212 to 219 mark. That's kind of interesting that crude and XOM is trading around these areas here at these specific times. Set this closer to 77. What do you guys think? Which end here breaks? Let's do a poll. Okay. Clear 7781 by 215, 212 to 219 period. Let's see what you guys think. I'll set this to 3 minutes. I think that gives us enough time beforehand. If you guys don't mind voting on that. I feel like they would at least need 7776 and 7777 for that to even be a slight probability, probably by that 211, 212 mark. Can you guys vote on that, please? See what you guys think. XOM looks like it's actually basing pretty strong here. Let me just set that 160 alert. So I would say logic-wise, this would have to trigger at least 7650, 77, probably around that 211 to 212 mark for that to even be a slight probability. Like it would have to be at least around here by then, so that it can start basing here during this period. Otherwise, I don't even think it stands an odd of retesting 8-1. So we'll see what happens here. We could start experiencing some volume and volatility during these periods for sure though, so we'll see. 212 again is linked to these volatility sticks, okay? Just an FYI, okay? XOM breaking 160 here with volume. Look at that break of 160. Look at that, Josh. Do you see that? Look at the trigger break of 160 on this thing with liquidity. That was 60K lot on XOM. I kind of wanted to see how it reacted first. Based on that reaction, I think I'll leave my contracts because that looks pretty promising. And that's what would set this up for potentially pushing to that 161 range. We'll see. Maybe they kind of both move at the same time, which if there's a clash between index and oil, that's for sure going to cause some volatility this afternoon. So just be mindful of that, you guys. They're trying really hard to base this. Okay, let's watch the 210 and 211. These are not flips, but this is pre-212, which is super important. And the point of day that was linked to highs was 1233. Okay, and you can kind of see what happened around 1231, 1232. So if this point in time at 216 is what's linked to that, we probably also want to watch around 215, 214. This entire period here is pretty important. Really nice move on XOM, if anyone is in that trade with us. Alright, you guys voted no by 1 vote. So, let's see what happens here. Like I said, I think at the very, very least, they need at least over 6.6, or sorry, 7.6.5, 7.7. Probably around this 211 period for this to even be a probability. Look at that liquidity break, you guys. Starting to pick up. Right around that 208. That's like that 2 to 3 minute mark prior. And they're breaking 7.6 ahead of then. That's the kind of progression you need in order for this to get those stick breaks around 212, 214, 216. 7776.50, 7777 being taken out ahead of the 210, 212 periods. Market makers are trying to push range here. And it's interesting because oil is also moving at the same time. Be prepared, you guys. This is probably one of the most important periods for the index today. Outside of those late day periods that we have coming up, but in order for progressive price action to occur, it has to be during this point in the day, okay? Like if it's not during this point in the day, then we have very high odds of staying stuck this afternoon, okay? or for bears progressing basically. If they break, like let's say take out 7-6, 7-8, tag 8-1, but then stall. So far they've tested 7-6, 7-5. No closing breaks over 7-6.5. The highest odds were around 2, I would say 210, 211. Ideally, you'd want it before 212. Why do you guys think that is? Why would you want to break that before 212? Why do you think that that is the logic that I'm working with, or conditions that I'm presetting? What do you guys think that is? I think it's quite obvious because that 212 period is linked to volatility, right? So you want to progress ahead of time, okay? Because if this period here is linked to this period here at 1231, you'd want to clear that range ahead of then. Does that make sense? Because what does that end up doing? That ends up reducing volatility, okay? So you need some progressive breaks ahead of that volatility period to decrease your risk. Does that make sense? Meaning, ideally around 210, 212, you probably want to start progressing over that 7,650, 7,7 to give an odd of retesting. Instead of having that downside break, it increases your odds of instead recycling that period to retest 8-1. Does that make sense? I'm not really sure how else to explain that. It's kind of like a time metric for price behavior and a way of like presetting conditions so that you can understand how price could behave around a certain period of time based on prior action and based on specific calculated points ahead of time. So for us right now, this 7.6.50 and 7.7 is a pretty big spot. So this is exactly where I would have expected it to have been around 210, 211, around this 7.776 area. That's still not enough though to be, I would say, progressive. Like you'd still have to try clearing at least 7-8, but this is enough to at least keep odds in play for 216 and 219. What's something that we have that's working in our favor for bulls, I would say? Post 212. So we know that 212 is a risk period, but what's working in our favor here? Time, but why? Because we have multi-flips coming up, right? Those multi-flips are bull flips, correct? They're linked to high of day. Does that make sense? Okay, so your price behavior during those periods of time could be a little bit more progressive, okay? And because the period is so close to this time slot here, our risk period, that can help immediately do what? Because we already know 212 could trigger downside. Look at what's happening here. It's doing exactly that. Okay? What could this period here do for us? And it's crazy because we're watching it play out, okay? We literally did exactly what we said. We tested 7.650, 7.7 at 210, 211. We couldn't quite clear, and I said that's not enough. You need at least 7.8, but that's what I would expect for them to do to keep odds in play for 216, 219. 212 is triggering some volatility back down. I would expect that because that price behavior during those time intervals is linked to bear activity. Do we still have an odd of retesting 7.6, 7.7, and 7.8, you think, during this period? I would expect volatility to start increasing post 212, okay? But could we have an odd of a negation period that occurs around 215, 216 is what I'm trying to get at. Whereas if this period wasn't until, let's say, 230, 235, do you see how bears would have a much higher advantage? I'm trying to teach you guys time to price behavior to odds, okay? In terms of like trying to pinpoint exactly what would have to break. And the more time you give for a scenario to play out, obviously the quicker it could accelerate down, right? Like if we didn't have any window here, I would expect this to immediately trigger back down, okay? Whereas we do have a slight window here for them to try negating. It's not the best odds, but if they at least met some conditions beforehand, they could keep those odds in play. What were the conditions that they had to have met before 212 to keep a probability period open for 216 and 219? I would say 1, sustainment of 7771, 2, test 7776.50, 7777. Do bears hold an advantage if they fail to negate, however, though, during 216 and 217? Another thing to note, too, was XOM was being very constructive, right? So oil is inverse index recently, which wasn't working in our favor either. That was kind of like an inverse indicator to kind of help with sentiment, okay? Let's do one more pull here. Retest 7777 by 219. I'm only going to set this to 1 minute if you guys want to vote on that. Because it's quite clear that they're either going to break 7-1 or they're going to try retesting 7-6. I would say to even have an odd of retesting 7-6, the 216 has to at least go back green and come back over probably 7-4.50. Otherwise, the odds of taking out 7-1 start to increase. They're doing a really, really good job, though, of keeping this still pretty tight beneath 7-7 and above 7-1. Can you guys vote on that, please? I'm curious to see what you guys think. And even though this is quite sideways, I still think it's a good learning opportunity, at least to understand how like price behavior could work, especially on days like this where we have very high odds of staying stuck within a very tight range, okay? XOM I had decided to leave my position on because it looked pretty promising to me when they tested 160. I would say maybe now as we're approaching closer to 219, I'll monitor a little bit more closely since this is a higher probability period for bulls, but we'll see because they're still not really progressing that much. We said that they needed at least over 7-4. You see how this is such a perfect session to kind of just kill premiums off for people? Especially in this range. Like core consolidation, essentially. Something that stands out to me this time for the bull period is notice with bears how, okay, like back in here, like we were still able to tag 7-6 ahead of time. Bulls so far are not able to tag even 7-4, okay, ahead of 219. That would increase risk here, specifically if they don't try to immediately negate off this 219, let's say, or 220 period. Yeah, but it's okay if you can at least spot these things. That's still a good thing. Okay, at least being able to spot this kind of price action ahead of time and understanding risk reward and odds is a good thing, because you would know how to position better and you would know not to like see like ES stalling 7-4. I would expect XOM to have broken. Okay, upside, and look at exactly what happened at 218. Do you see this? Look at that 7-4 stall at 218. Look at that inverse candle here on XOM. It just keeps me more inclined to keep holding my XOM position. Okay, and you could use that as a hedge. We'll see if they hold 7-1 though. However, like I said, if they try negating just a little bit post here around like 220, 221, maybe they want to delay till 230, 235 just to consolidate this even more, then so be it. But so far XOM is what's saving the day. I think that 161, 161.58 could still stay in play there. I have my stop set at break even on ES. And position sizing matters too, right? Like I didn't want to do more than 3 contracts on ES because it didn't really, even though 6.5 to 6.8 area seemed like a good entry, the odds of them actually clearing weren't super high. Okay, so it's better to have like a good area for risk reward, but it's also good to keep expectations. Like you don't want to have your expectations too high. Okay. And what's the one biggest factor that's helping us keep our expectations relatively low today? There's 2 things actually. What are they? 2 things that are helping us keep expectations low. Actually, there's more than 2 things. There's like 6 things, but just give me at least 2. One of the most obvious is these are annual ranges. Second most obvious is we're stuck in what? In multiple inside ranges, right? Third most obvious is where we opened. Fourth most obvious is we haven't even digested these areas yet. They're still completely new to us. Do you guys see these negation sticks post here around 220, 221 for a 7-4 retest? That's what I was saying. Just monitor a little bit post too, just to kind of see how the behavior acts, because they're still trying to hold 7-1, but they're still stalling 7-4. Usually 230, 232 are generic periods for the index. Today's flip's actually at 235, but I mean, we could just kind of monitor here to see maybe if they're delaying, and what would be one reason why they might want to delay if that was the case. And this would also make sense, because we have a limitation of what are we quite limited on today, I think, anyway, based on how I analyze things. What are we limited with today? Range, yeah, so that can cause a lot of recycling back and forth, premium decay, killing time, delays. Okay. Something interesting too is the fact that we have really late odds. So I wouldn't even be surprised if they waited till like the last 10 minutes or even like the first few minutes after the close, since they have odds at 405 and 410, which would be pretty funny. And they have odds at 351, 353 today too. Generic odds and times of day are always 350, 355, 354, but it's interesting that they have odds today around these periods, which could end up meaning, unfortunately, another hour and a half of this until they actually finally break range. Okay, I think I'm going to end this stream here, guys, just in case we end up staying stuck like this for a while. 7-1 breaks, I would imagine, would try re-triggering 6-8, 6-6. If they end up holding off 6-6 this time instead of 6-4, that's going to keep us core bound, okay? So they could technically break 7-1, but then still hold 6-6 to 6-8, okay? Which would essentially make a higher low and then give a higher odd of re-triggering 8-1. In other words, that would kind of make up the differential of that 1.5 point range that we breached below and we're stalling beneath, okay, up here. If they were to take out 6-6 the second time around, then that's what's going to increase our odds of getting back to like 6-1, 5-8, 5-1, 5-5. Does that make sense? That'll open up your range for downside. I feel like they're trying to restrict it a little bit from the way I'm seeing this trade, but again, I could be wrong. I feel like they're going to keep it kind of constrained though. We'll see what happens during the 230 to 236 period. Maybe at least if a 7-1 hold and a 7-4 break. XOM's also starting to weaken here a little bit now too, so that could actually help odds a little bit on ES. On this 7-4, 7-6 retest maybe. Oracle kind of stalled too. Well, most individual names are also still stuck and haven't really moved much. CL had a nice base above 81.75. XOM still holding over 160 though. I would imagine XOM would have to get back beneath this 160 for ES to progress, because the oil is still relatively strong. I still find it pretty fascinating that they're keeping this within a 17 point range and 34 points from OR, or from lows, I mean. You can see these micro walls too, like before it was between 8-1 and 7-8, then 7-6 and 7-8, then 7-4 and 7-6, then 7-1 and 7-4. Actually, I'm still holding off 160. That's the first structural break here on ES beneath 7-1. Like I said, they can still retest 6-6, 6-8. Kind of relative to if they hold that higher low or not. That would make this extremely pinnable, you guys, by the way. Them breaking 7-1, but if they hold 6-6, that's going to make this a really, really, really pinnable afternoon and core ranges, okay, unfortunately. But we would almost rather they break 6-4, but I would imagine that they want to keep it pinnable based on what they did over the last hour and a half, but we'll see. And we could tell immediately if they, like, let's say, start negating here, like, okay, break 7-1, hold 6-8, and then negate. So, like, if you have, like, an immediate stick like this or something, okay, does that make sense? I can tell that they're going to keep this pinnable, which I think because we have an upcoming period here at 235.36, that's probably the case, but okay, I'm probably going to end the stream here, guys. Thank you so much for watching. If I feel it's worth me coming back on for the last 10-15 minutes of the day during this period, then I will. So look at that stick, you guys. That's exactly what I just drew. The market's almost too predictable sometimes. We'll see if they end up holding 6-6, 6-8. If they do hold above 6-6, 6-8, again, I think that they'll keep this pretty pinnable, which unfortunately isn't really great for either end of the trade, like for both bears and bulls. But I mean, like, look, that's exactly what they're doing. Mother, I don't know if you're allowed to swear on here. Yeah, they're gonna try to retest 7-4, I would imagine then. So now they're playing both ends, okay? But they think that they're being very slick with this, but they're not, because we know that 6-6, 6-8 is still structural support. 7-8, 8-1 is upside overhead. So basically what they're doing is they're keeping it, because we're not gonna go off of 6-4, we're gonna go off 6-6, 6-8. Okay, like roughly 1.5 points. Do you see what I mean? Does that make sense, you guys? Like, they're still keeping this now. They're holding 1.5 points, okay? Beneath our actual support, which it should be closer to 6-8, 6-6. Okay? That actually can help odds for bulls, even though this seems bearish. That was actually 1.5 points higher above that 6-6 to 6-8 area. But in order to progress, they obviously need to get back over 7-4 and this 7-6. There was that time period around 235. So keep a close eye on 234, 35, 36. The next period here that I had marked was 251. 254, I did send you guys this, but 312, 313 crucial, by the way. And then the other periods were super, super late in this session today, okay? I would imagine that on a 7-1 break, 6-8 hold, if they don't take out 7-4, volatility is probably going to increase. If they take out 7-4, they're going to keep a slight advantage for bulls, but if they end up stalling here, they're going to probably have a lot of this. Okay, if they, like, let's say stall here, you'll see a lot of this because they're still saving downside risk. Okay, usually they do that if they want to chop premium. because otherwise they would have just tested 6668. Okay. Okay, good luck this afternoon. I'll catch up with you guys probably in another hour or so. Mainly if we start breaking structure, if we start breaking beneath 6-6 or above 7-8-8-1, then I'll probably turn the stream back on. But otherwise, I'll probably just leave this